Nana, dump it all. Crypto Nana, exit liquidity, hodl Nana, dump it all.
Crypto Nana, exit liquidity,
dump it all.
hodl Nana, dump it all.
Nana, exit liquidity, hodl Nana, dump it all. Crypto Nana, exit liquidity, hodl Nana, dump it all.
From the day we arrive on the blockchain and blinking step into the trade, there's more to lose than can ever be won, more to dump than can never be saved. Influencers, tweets, and the noobs all follow, buying high, selling low, what a game. But the boomers know, and Saylor, he knows that the dump is coming. It's all the same. It's the circle of exit liquidity, and it moves us all through despair and hope, through faith and FOMO, till we find our place on the path unwinding in the circle of exit liquidity. Some of us fall by the wayside, and some of us soar to the stars. But the influencers always win with the Lambos and their cars. So beware of the pump and the inevitable dump, for the cycle continues and the news get wrecked. Nana, exit liquidity, hodl Nana, dump it all. Crypto Nana, exit liquidity, hodl Nana, dump it all. Crypto Nana, exit liquidity, dump it all. hodl Nana, dump it all. It's the circle of exit liquidity, and it moves us all through despair and hope, through faith and FOMO, till we find our place on the path unwinding in the circle of exit liquidity. Dump it all.
So, hey everyone, unofficially, hi, happy Friday. How's it going, Alan?
What's going on? Happy to be here, Joel. Appreciate you having me.
Yeah, absolutely. And we'll dive into it more a little bit later, but we were just talking about, the conference circuit, but also about like products that are being built that people showcase, and some of them look a little like, is this really for this year? It should have been hot 10 years ago. So, yeah, there's a lot of like hot 10 years ago type products you kind of see.
Yeah. I think we were just sort of saying before we aired here that a lot of the space in Bitcoin is behind, and the industry needs to catch up. And with everything happening right now, there's no excuse to not ship. So, shipping season, man. That's what bear markets are for.
Yeah, and is it like, here's the thing. How much of a bear market is it? The reason I asked that is because if you go by like the Bitcoin chart, I guess it is a bear market. If you go by like the ETH and big alt sector, it's like we've always been in a bear market. And then you go by like what the market seems to deem as the privacy sector, and we're just hitting off the bull market right now. Like it's a disjointed cycle this time around a little bit. I don't know if you've gotten that feeling.
No, I absolutely do. If you look at the 4-year cycle for Bitcoin, it would indicate another leg down, quite frankly. You look at history, and there's too much volume and there's too much interest on Bitcoin relative to what the chart would look like. And if you ask anybody right now, they'd say, yeah, I think Bitcoin's probably going to go down, but I'm also optimistic on 2027. And so is that optimism baked in right now? And are we going to be able to hold these levels? I don't know. I'm not a savant. I'm not an oracle on the Bitcoin price. I'm a builder. And my expertise in skill and building would enable me to agree with you on the privacy front. And that goes back to the start of the podcast where we said people that are building and creating utility are going to see the best results. And privacy is definitely hot and has definitely been something that should have been built a decade ago. And when you look at Zcash, Monero, Dash, what we're doing with Qi on Quai, all of these different things that enable better privacy and sovereignty are in demand because we are going into a world where there is more surveillance, there is more control, there is more influence of what you do online, and digital cash should be private. And these tools and the software that we are using for this is speech. And this isn't a controversial take, but we should have just had this the whole time. And so, yeah, I would love to see privacy continue to do well. And I would love to see people continuing to build around the privacy sector because it is absolutely a need. And that is actually utility that crypto can provide. We're going to see people, I think when you see kind of that middle curve of things that have been decimated, meme coins have drawn endless speculation and attention away from good projects. And so hopefully we're in the stage and we're in the place, not just this, hoping for a stage, but we're in the place where real development can pull real attention into the utility sector and privacy being a part of that.
Yeah, absolutely. I couldn't agree more. Let me hit the quick couple second intro and then we'll just launch right into the stuff because I haven't done shit on Saylor in a few minutes and might as well do that. All right, 3, 2, 1, go. And hey everyone, welcome to the Digital Cash Rundown, episode 226. That means I've been doing it over 226 years in a row. I'm joined by the one and only Genepi, say Mew, and Alan K. How's it going?
What's going on? Good to be on.
Yeah, absolutely. And thanks for coming on relatively short notice. I was not planning on doing a show today because I was traveling back from the airport, but then I caught a bus that was early, like an hour and a half early. So I'm like, oh, I'm going to make it in time to actually launch this thing. So, yeah. So thanks for being here. It's a good time. I know that we kind of connected over the Bitcoin conference, and then I just came back from Consensus. And yeah, there seems to be a lot of fun things going on. Let's just say that in the world of these here digital cyber coins and cyber hornets is what we'll get into.
Feels like a lot more hornets these days than cybernetics and people that are excited about crypto. It seems like we're catching a lot more flack than we should be with AI and the hacks and everything. But yeah, let's jump on into the topics today.
Yeah, the hacks. Well, we already went over that before. That won't be this time, but there's plenty to talk about there. So let's talk about a good old our buddy, old Michael Saylor. So Justin, this is as I'm throwing up a post from Altcoin Daily here that just reposts the things. Says Justin, Michael Saylor admits he will sell Bitcoin. You buy Bitcoin with credit, you let it appreciate, and then you sell Bitcoin to pay the dividend. And I was there at Consensus just a couple days ago, and when he was talking about this, and I saw here's a picture I took of him on stage, where I said, "Oh look, Mr. Never Sell, selling us on selling his Bitcoin." And so, yeah, what's your take on this whole abrupt about face from never sell to, yeah, sometimes you sell?
Yeah, I mean, if you look back in history, I'm pretty sure around 2012, Michael Saylor was actually a massive critic of Bitcoin.
Yeah.
And so
Those are
he's
servicing
doing
these
this.
days, by the way. Those old posts from
Yeah,
2013.
you gotta dunk on him when you can, right? And it is a bit refreshing, I would say, from a market participant perspective on Bitcoin to see Saylor return to more of a normal market participant in the broader scheme of things. So going from this lunatic, never sell your Bitcoin, sell your kidneys, make sure that you can remortgage your house and buy more Bitcoin and do it through MicroStrategy and then do it through Stretch where we're going to pay dividends, I think is ludicrous. And if you look at the structure of MicroStrategy, it literally looks like this, looks like a pyramid.
Mm-hmm.
And right now on the top, you have Stretch sitting there with all these promises. And it's a different form of capital that he needs to bring in. And he's exhausted the capital that is part of the never sell your Bitcoin crowd. And so he's pivoting into the, well, maybe we're going to sell our Bitcoin sometimes. And that's just part of the maturity of the market, in my opinion. And so for him to become more of a normal market participant, I actually think, yes, it's bearish that Saylor might sell some of his Bitcoin in the short term, but I think longer term it helps because it stops him from getting to a larger percentage. So if he's at 2 to 3%, well, what happens when Saylor owns 5 to 10 to 15% of Bitcoin? And I think that's much more of an existential risk to Bitcoin than him selling his Bitcoin in order to fund this whatever MicroStrategy pyramid is with preferential stock and dividends on the preferential stock and different shareholder classes and a bunch of people in a conference room all excited and yelling for some complicated financial scheme versus just buying the Bitcoin directly and making sure that they are part of the percentage of distribution rather than under one bucket of 3 to 5%. And so, yeah, I mean, I think it's a next chapter in MicroStrategy. I think for him to go this way is a testament of the maturity of the market. And I would see it maybe as a good thing. And it's fun to dunk on him. And it's fun to see what people can do in terms of the exposure to MicroStrategy. I'm sure some people have done well, some haven't done well. But it's definitely a funny thing to see nonetheless.
Yeah, and that's just to hit on, what's his name? Mert. We have a comment on this thing here. Mert always with the Sizzler takes of in the response to buy more Bitcoin than you sell. He quoted that with a screenshot of the sell a kidney if you must. He says, "Out of kidneys, boss." And so, yeah, it is a kind of interesting thing. The thing about Saylor and his machinations is it's very hard to sort of pin down a very simple, like, a way of describing exactly what's going on because it changes a lot. And so the previous way things were the never sell your Bitcoin, but then take in a bunch of money, give dividends, and then don't always buy Bitcoin with that money. Sometimes give it to the dividends. Very much a Ponzi, right? Very much pretty clear cut. Oddly enough, this very bearish situation makes it a little bit more legit, where now it's like, all right, well, what he's doing is he's hoarding Bitcoin. He's taking the risk that it might not go up. And when it does go up, he's passing on a small bit of the profits to the people that have invested in his company, but he's keeping the rest. But what people don't really understand really is each of his, like, I guess, financial product kind of things seem to make some sort of a sense under the idea of, oh, long-term Bitcoin goes up and people just want different ways of exposure to that appreciation. The problem is all these products have very sort of tons of flexibility on his side built in and like none on the buyer side. As far as if he was just going to give people 11.5% a year, I mean, that's pretty crazy. If he can do it, if the risk will handle it, go ahead. But then he can also say, well, we can also lower it if we want. Oh, and we can also like not pay you for a few years, just arbitrarily not pay you if we want to. And also, if there's a bankruptcy or something like that, it's not debt, so you don't get paid. You get paid kind of last. And so all this like flexibility built in, so he can come out with a new product to then sell people, and then like, oh, it's built on this stuff. That's where it gets. It's each of those in a vacuum is not necessarily sketchy, but it's the fact that you can switch them around and do a new one, and also the fact that you lie to people about like, we're never selling Bitcoin. That's what, when you buy some strategies, some MSTR, for example, you're getting exposure to Bitcoin. Well, it's like, he used to buy it all the time with it. Now he sometimes just keeps the cash, and now sometimes he goes the opposite direction. So it starts to get really weird, you know?
Yeah, I mean, I think from my point on the weirdness, it is the fact that people almost need to worship a person and an idol of the investment strategy, and the underlying DAT infrastructure has really crippled the crypto market. And for people to go and participate in this scheme, I think they're more so doing it not necessarily because of the exact what it is and how the structure is outlined, but because of Michael Saylor. They trust him. They trust that he's going to execute. They trust that he's going to get the price of Bitcoin to go up in whatever system that it takes. And people in the Bitcoin market are looking at Michael Saylor to say, how do we drive this asset forward? And they're looking at it in terms of a ROI investment versus how do we make this a utility that we can use and have crypto that is actually purposeful versus just purely a number go up. If you look at how Michael Saylor even custodies and recommends custody, he tells people to use Fidelity. He is not a self-custody maxi. He is not a decentralization maxi. He does not care about Bitcoin itself. If you look at his Twitter page and you scroll through, he's talking about products that have listed stretch on Ethereum and other platforms and other ways in which people can access this yield that he is giving through this investment vehicle. And so for me to look at that as a developer and someone, we kicked off the space talking about privacy and things that actually benefit people through crypto. I think, again, people are just sort of looking at this as we trust Michael Saylor. And I don't know how that will play out long term because I don't know the growth potential of Bitcoin from a purely utility perspective. Sure, as an investment in a broader class, it will do well. He was calling for $13 million per Bitcoin in Nashville in 2024. So that number to me is pretty insane. And to see that there's competition in terms of real utility from other projects like Zcash, like Dash, like Monero, like Quai, and all these other systems that can be potentially more distributed and more effective, then I think a lot of that attention will shift as we head into sort of these next few decades and next few areas of opportunity. And so the funny part is just the tone shift. And so you have this tone shift and you have this trust that people put into him. And so I think all the ratios, like the merts, the comment section on these tweets is dunking on him, not because of the actual shift and what that means market structure wise, but because of the fact that he promised the participants of the system one thing, and now he's changed it completely. And so, as someone that's sort of more of an observer, I'm sure there's going to be a bunch of different ways that people that do look at MicroStrategy and Stretch and these other things are like, well, did you listen to the earnings call? Did you listen to these things? And it's like, well, I don't have to, because from a surface level, I could see what's going on here. And Joel, I think your points are pretty spot on.
Yeah, that's the one thing that's kind of interesting is the changes, right? And it kind of reminds me, and I guess I'll mention this about the consensus bit, but like, it'll come back. But it's kind of like, do you remember back in the day, and it's crazy a lot of people don't remember Dan Larimer, but I'm sure you know Dan Larimer, right? And his kind of thing was every time one of his chains, whether it was BitShares, whether it was Steam, whether it was EOS, whether it was, I don't know what he tried to do after EOS, it didn't take off, but that he's a chain jumper because every time something is like fizzling out and the hard work has to go into actually making it work, then he's just like, bye, I'm off to do a new token so I get another round of startup capital to build on an idea and never have to fully iron out the kinks. And so there's a little bit of this going on here where there's this super uber bullish narrative to just get a bunch of finance bros and little sweaters vest thingies or the little finance vests to get all like crazy about, oh my gosh, it's the next everything, and put in way more capital than they should. And then every time the product, whether it's MSTR, which started to lag, there's a new thing, and then you have to like get used to the new thing before you can figure out, wait, that's not a good idea. But then there's another thing. Wait, there's more. And it just keeps kind of going. The thing that's kind of funny is on one end, I do think that there is a place, at least amongst the boomers, to have sort of financial products built on top of like something like gold or Bitcoin or something that do things related to that aren't just like an ETF. There's a place for that. And also, I think that on the other side, the digital asset treasury company people just don't know. Like Saylor's a little bit more clever than the rest of the bunch because they've all gotten wrecked to shit. Right? They have not been able to. Oh, we're gonna have a company that does nothing but buy Bitcoin and then underpants to mean profit. It doesn't work. And he's managed to figure out how to like keep it afloat so far, but who knows for how long.
Yeah, I mean, I think DATs across the board as well are way too complicated. And when you look at yield in these systems, there is no native yield on Bitcoin unless you're a miner. And so that's why you almost have the Trump family going into American Bitcoin and doing their mining infrastructure setup, because they've tried all the other flavors of yield and extraction, but the best place to get continued yield and build on top of this infrastructure is in the mining category. And so if you are going to get exposure in that sector, I'm pretty sure you can mine a Bitcoin right now for 10% cheaper without factoring hardware and electricity costs and all the other things that you need to amortize. And so that is a competitive edge for DATs that are structured to tap into the mining side. But you're absolutely right. If you look at Nakamoto, we were just at Bitcoin Vegas. I'm sure that was a whirlwind of people that were participating in that DAT, and same with even the Ethereum ecosystem. And so you have Tom Lee on the other side, like Michael Saylor, who is this figurehead almost, where people are looking for the bid and they are looking for the structural investment that is promised for these cryptocurrencies. And I don't know if the DAT bid is exhausted. I don't know if the DAT unwind is what caused us to go from 120 down to where we are now. And I don't know how 1010 factored into that, but I think there's a lot of slog that we need to work through across crypto as a whole, from the institutionalization attempt and where the current institutionalization is going. Because I do think there are a lot of pros and good things that are coming with the institutionalization from Morgan Stanley, Charles Schwab, ETFs, other types of DATs that actually work. But people need to get serious about where that yield is actually coming from, what yield you can tap into, and what makes sense to operate for a treasury company.
Yeah, and this is one of those things where I remember CoffeeZilla has been a big critic of Saylor's, machinations. I don't remember who it was, but someone on the sort of the other side who has also the same finance vest on, sort of had a conversation with him and sort of like burst the bubble on a lot of these like Ponzi type accusations. But the key thesis on that is Bitcoin's going up forever. And the key thesis for that is Bitcoin is scarce, the fiat is not scarce, therefore, there you go. And I think that that's like an 80% truth. The rest, where it's not truth, is that assumes only one scarce asset exists, and all the demand will go into that. So if you just say, okay, I want to put money into something that's scarce, this is the only thing that's scarce, I think that Bitcoin mops up everything kind of under that thesis. But there's other things that are scarce, and it could be like, oh, like I have things I can do with this. This is also scarce. Let me diversify, and eventually there's value other than scarcity coming in. That's the amplifier, and then you start going more into these other things, and eventually it just like the Bitcoin 21 million limit is broken many times over by now, because there's so many Bitcoin forks. There's so many other coins. There's so many, even though Bitcoin itself still has that, you can't have like, you have gold, silver, platinum, and a few other things. You can't just come out with a new rock every week. It just doesn't work. You can't do a better gold that comes out of the ground. It doesn't work the same way. In this game, the digital scarcity is very valuable, but it's an amplifying factor. And I think once the market starts seeing other things are trusted that can be, this is actually digitally scarce and this is uncensorable, then that starts to dilute, and then that's when Saylor cashes out for fiat, and everyone else is holding the bag.
And usable as well. And I think Bitcoin will always have its mimetic premium and mimetic adoption. And unfortunately, that same 21 million hard cap that is a talking point and a meme. And I've actually I've tried to get this point across to so many people, and they refuse to listen because maximalism is such a nasty thing. And I get it. These ecosystems need immune responses for people that are literally shilling garbage. But for the people that are nuanced and have done research and understand, I do think it is worth looking at the economics around the 21 million hard cap and what they mean. Because over time, if Michael Saylor is wrong and Bitcoin does not continue to go up on the schedule in which he expects, and for all intents and purposes in our industry, I hope Bitcoin does continue to go up. I'm a moon boy just as much as anybody else. That's great. A rising tide lifts all boats. But there should be critics and there should be people that assess and see if Bitcoin loses its security budget and continues to have, without the prices going up, you will have a fundamentally more insecure blockchain that is going to lose some of its properties of soundness and global acceptance and utility that it currently has, because people are going to lose trust in it because it is not going to be adequately secured. And that is the sort of premise of, I think, the next 20 years is what does that price of Bitcoin do? And what are the energy unit economics that go into Bitcoin in terms of hash rate, supply chain, ASICs, electricity, power build out, the idea around what Bitcoin is. I'm not going to say quantum, but a lot of people will probably be thinking quantum and what happens with that, and then the utility on top of it. And so you're right, where you look at, okay, how does that factor into this sort of golden goose where everyone just expects it to go up? I think even then, like this past year, if you look at 2024 and 2025, people were probably more expecting 180K versus 120. And then now that we're at, 80 right now, well, people are like, it's completely uncertain. I think the whole market is split 50-50 on up or down.
Yeah.
And so for the future of that, it's hard to say it's such an easy shot call because they've tried their shot calls for the past 3 years and they've all been wrong.
Yeah, and I've been, since around 2017, more of a Bitcoin critic than a supporter, I would say. But even then, in the 2021 bull market, I kind of thought it would hit 100K when it didn't. It was at 69,420, the poetic number. But yeah, it'll be interesting to see where that goes. The long-term mining kind of economics of it do kind of make things a little interesting. There isn't. I've written a bunch about the security budget, the ticking time bomb that's coming that you have to do something about eventually. What I think is an interesting wrinkle into this is, and maybe this is a little bit of cynicism, but I don't necessarily think it is. You have all these, for example, American Bitcoin mining companies. And at some point, there will be a case made that it is a matter of national security to make sure that there is security behind Bitcoin if it's a strategic asset that's being accrued by enough state treasuries, for example. And if it's being used as a tool, or you don't want, for example, the Iranian regime to control too much of it, to do too much transaction power, whatever it is, I think that then you get that, and then you could say, oh, guess who owns all the mining farms? Oh, the people who get to push for these kinds of securities in the government. And so the thing of it is, like, from a technical, the thing about predicting where the market goes and where Bitcoin goes, from a technical sort of like developer standpoint, I feel like it's very straightforward and predictable, but there's so much unaccounted for that is not in the tech. There's so much in the ecosystem you just can't account for. Where I kind of that kind of reminds me of when Ludwig von Mises predicted that the Soviet Union would probably collapse somewhere in the 70s, and it extended far beyond that, because what he didn't see is that the socialist calculation problem, where they couldn't calculate prices of goods and services, that they were just looking over and seeing what stuff cost in the capitalist countries and sort of cheating. And so even though it was like academically correct that this is the time frame it would collapse, it just, well, there's another thing we didn't account for.
Yeah, and I think the altruistic mining is likely where we end up from the fact that Bitcoin is already too hard to change, and that 21 million number is so set in stone and mimetic that they likely, there's like two buttons, right? And you're like sweating between the two buttons. And do we let Bitcoin become controlled and ran by altruistic miners who don't necessarily have our best interests at heart? Or do we change the rules of the protocol from whatever Satoshi, who we've knighted as what looks like a god to Bitcoiners, and do we change that either tail emission from 21 million, or do we switch to proof of stake, or do we do something different? And the way I see it, I think there is a third option with utility built on top of Bitcoin, Quai being one of those things where over time systems can merge mine with Bitcoin, provide utility, and have more security to the base layer by paying miners. And so people that can be economically profitable or have better unit economics that can still mine Bitcoin at a larger scale without doing it altruistically will be able to remain competitive. And so when you look at how different ways can come into that and give back to Bitcoin, ultimately, I think that's a positive. I do agree that's probably the most likely outcome is miners either having a bunch of old hardware and getting free energy or subsidized energy from the government. That's probably the next step of where we're immediately headed. I actually do think there is some bills on the way proposed by Loomis around mining infrastructure being built out in the United States, specifically around ASICs that are built, because you'll still look at these American Bitcoin companies and all of their ASICs come from China, likely with some ways in which they can control hash rate or turn off machines or who knows what if it gets to that point. And I think those are the things we should be skeptical of. And I do think Loomis is probably the biggest proponent of Bitcoin adoption from a government perspective. And so them turning their attention towards Bitcoin mining was definitely interesting, because to me, being a proof of work maxi and someone who's gone way down the rabbit hole of mining in proof of work so many different ways, that is probably the purest and easiest place to start in terms of acceptance and adoption from a government standpoint. It just works. Proof of work just works. And Bitcoin mining in particular doesn't really change. It hasn't changed pretty much since Bitcoin launched. And so for them to go and look at that and start in terms of a hardware build out, looking at the companies that they want to court to have in the United States, and then have that as a means of Bitcoin treasury or Bitcoin accumulation or Bitcoin security participation. I mean, I think you even saw just the other week, if there was someone in the army or someone in one of the branches of the government's running a Bitcoin node, and they do some participation with that, and it makes them feel good, likely, or they're tracking it and they're looking at ways in which they can have more control. And so I think that's where a lot of this is headed. You have countries like Bhutan, El Salvador already doing a good bit of mining. And if it does become a sovereign strategic asset, they will all likely do it at a loss or at the cost of printing their own dollars to get more hash rate. So at the end of the day, I see that being probably one of the true sources of where this economic game is heading, around Bitcoin hash rate and eventually around electricity and how electricity is broadly used, regulated, and monetized.
Yeah, it is going to be interesting to see how the energy game develops with LLMs, where now that's like a constant use. Whereas like Bitcoin was the grid smoother, where it's like, okay, dead energy, you can just use it. And now it's just like, well, if you have some like data centers next to something, and like when electricity goes down, you just switch to them for compute. And it's kind of interesting. There's a lot of ways this could go. But so the conference, right? So yeah. I'm going to throw up a couple of just basic things. So there was, first of all, on the first day, there was a lot of allegations that there was like no turnout. This Jacob King fellow said, Bitcoin conference saw a record low turnout this year with only a few dozen attendees. He said several speakers also didn't show, and the event ended 4 hours early. And I guess that was the first day. And then the response to this is it had over 40,000 attendees, the largest, with 500 plus speakers, blah, blah, blah. That everything was bigger than it seemed. It just, the first day was a little bit weird with, Cash Patel's whole thing. So first of all, have you been to a Bitcoin conference before? Or was this your first?
No, man, been to a bunch of different Bitcoin conferences.
As far as like the Bitcoin Magazine one, this one.
I did Bitcoin Nashville in 2024. I did not do Bitcoin Vegas last year, but came back to Bitcoin Vegas this year.
How did you, like, if you're just being objective as much as you can, how did the size and scope feel compared to the previous ones?
So I think,
without data, of course,
my sample size of those two is super funny, because it went from President Trump headlining Bitcoin Nashville 2024, speaking in person, RFK there as well, Vance there as well, I'm pretty sure. The whole Rolodex of people that are courting the crypto bid and promising everything and essentially saying, we're going to deliver you the moon. Or we're gonna say we're gonna get Mars, and if we get the moon, we'll be happy with that. And so the excitement was off the roof in 2024. There was a ton of anticipation, and I think that corresponded with that rise of Bitcoin that we had. And now looking back, in contrast, so I think with 2026, that was a good year of that kind of 2-year arc, where 2025 was probably that middle ground, good to skip for me to have this assessment, because now you kind of have the backup guys that are coming and saying, we're going to do some Bitcoin stuff. Sure, it's interesting. And then we're going to keep it on our radar. We still have a lot of developers that are in jail. So, there was a snafu with Free Samurai, with some of the people getting kicked out and brought back in. You have the broader retail exhausted. Yes, there were people there on Monday. Monday was a whale and sort of pro-pass day. So by design, it was meant to be lighter. So I'll ignore the FUD from the comment sections and people that were looking to dunk on Bitcoin. And I think dunking on Bitcoin is probably, rightfully deserved in the current conditions. And so that's where you get a lot of those takes from. But Tuesday and Wednesday for this year were packed from the broader participation. I wouldn't say it was as busy as 2024, where you sort of have this anticipation and hype, where you see these milestones of what we're working towards. And you see very clear things where it's like, if I vote for Trump, I'm going to get Bitcoin to go to the moon. And then now, okay, Trump's in office, and we've had 2 meme coins launched, a failed strategic reserve, developers still in jail, and Bitcoin's down 40% off the highs. And now we're looking around for catalysts, pointing fingers at each other. Michael Saylor is in the current position he's in, and we're all like, well, what's about to happen? And so underlying that, you do have the OGs, the people that have been around, people like myself. I've been in Bitcoin since 2016, and people that, I was a student, so I didn't really get to participate at a high level at that time. But, you see where things are going, you see the trends, and people are still excited about that undercurrent that will exist regardless of who is frothy on top. And so the undercurrent of people building and doing things is different, and that motion is still getting built. It's just there's nothing really to culminate right now for the immediate catalysts, in my opinion. But that is still infrastructure that is being developed, and I think that is where the tone was this year. Is there's stuff happening. We don't know what's going to come out of it yet, but ideally we still kind of keep marching towards this goal, and then things will kind of get frothy along the way. I think, in retrospect, 2024 is super frothy for sure.
Yeah, and I would, I guess, corroborate a little bit of that, where 2024 was kind of like a big hype year in Nashville, and then 25 was a big hype year in Vegas too. And I mean, first of all, you had Ross Ulbricht being the final speaker there, and it was super packed, standing room only for Michael Saylor immediately before. And I don't know if I was around for Saylor's talk this year, but in consensus, I was kind of there, and it was significantly pared down as far as attendance. It was peak cult last year, I would say. Yeah. So I don't know. Think about these numbers, right? As far as attendees, I feel like this year was smaller. Now, what that could be there could be fewer attendees, but also there's something about when the energy is different, it shows up different. And so I think if you had a metric of per attendance units, right, as far as per hour, how many people were there, I kind of feel like in previous years it was just packed with people all the time. And this year it was, and this was the same with consensus, I kind of feel like people showed up and then they kind of they weren't just there the whole time. So it felt semi-empty in some ways, but there were plenty of people anyway. So yeah, the energy is very palpably missing, sort of, I would say. Would you? Yeah,
lack of a main character for everyone to rally around, for sure. Maybe
though he's still there,
but maybe be the guy. It's true.
He just wasn't the guy anymore.
New main characters, right? And I think you're right. And I think that's the overall malaise of crypto as a whole right now, and people realizing that the future is not here yet for where we wanted to get to, and it's going to take longer and actually take real work. Like you said with the Dan
Heaven
Lambert,
forbid.
doing real work, right?
Yeah.
In crypto, oh my gosh.
Who does that anymore? Are you a nerd? Like,
Yeah, right. You like programming and vibe coding and building things.
mhm.
But again, you have the undercurrent of everything being built. And so, yes, it was sparse. Yes, conferences are difficult because side events take a lot of the mind share and take a lot of the interest away, particularly at a consensus, I would say, because there is just people on that side of the industry aren't going to be your people that are at Bitcoin Vegas, and they're more of the type of all of the different other startups and all of the other projects that are launching tokens that are going to court events and mindshare away from the main conference. So from that side, yeah, I think that's the split, and everything continues to get more fractional and get more distributed. And instead of having one thing to sort of rally in one moment and thing to rally behind people. So maybe Clarity Act will be that. I was a little pessimistic on Clarity Act, but I'm getting more optimistic as the days go by, just in terms of what it means and what it does. So we'll see. Maybe that will be good.
I have to say, when the Clarity Act came, the idea, the conception came around, I was never bearish on that. I knew something would get through. The initial, and I really have to look into what it looks like these days. The initial version looked kind of really good. Like, as far as like, wow, there's a lot of like enshrinement of like open source tech protections and non-custodial rights and things like that are like, and then the which decentralized assets don't have to be attacked by the SEC looked pretty good. I don't know what Frankenstein form it is in today, but I mean, obviously the big banks threw their weight behind fighting it over some of these yield things. But I just think that there's like, I don't think the banks have any reason to block a Clarity Act like that. It's just they didn't like those provisions. The entire crypto industry wanted it through. The entire presidential industry, the Republicans, whatever, wanted it through because they wanted their win, that we won for crypto. I don't even think the Democrats really, as a whole, wanted it to just not win, because then you just have like no clarity. They would want a better version according to their eyes of it, but it seems like there was just momentum that everyone wanted a deal. Everyone wanted a resolution. And so I think we're going to get something. Just hope it's not awful.
I'd rather be buying crypto in Wells Fargo or Chase at this point than Coinbase. That's for sure.
Yeah.
So
I mean, Coinbase is kind of interesting because then also Brian Armstrong laid off a ton of people, saying he's like, we're doing more AI stuff, and he used like GBT to like generate the post, which is like the ultimate disrespect. It's like, you all lose your jobs, but we use AI now. This thing is
things that don't happen in a bull market. That's for sure. And
yeah.
So,
how long does it take to like write your own thing? Like,
right.
The disrespect.
Or it's like whenever Jack did it with the block, there was one thing where the grammar was a little different, and people are like, he wrote that one part, so it's heartfelt because he wrote this one interjection where the M dash was actually 2 dashes rather than a combined M dash. And it's like, okay, what kind of forensics do we need to be doing on these CEO posts to make sure that they're writing their layoff Twitter posts with
what was one of my favorite comments? It was like, gently laying off 40% of your workforce with Gen Z lowercase.
Right.
Jack just did it all in like lowercase.
And the thing is, though, it's funny because it's great air cover. Because if you look at the numbers for Coinbase, and I'll be critical of Coinbase, they had an Echo acquisition of $400 million of stock for Kobe. They had Deribit, or another acquisition as well, of a perp platform that was over $1 billion. And they had a failed and botched NFT exchange launch. And then now you're going to have non-engineers vibe coding products for an institutional exchange. And so for me, if I'm a customer in the United States and I look at their asset listings and I look at the way in which they've gone around the crypto industry and I look at the current product suite, do you feel safe after these leaks of customer data, after downtime yesterday, using this whenever you do have Clarity Act around the corner that takes good assets, gives a framework around the good assets, and puts them in a place where you already have your money, i.e. your bank? And so for retail, to me, that makes a lot more sense. Where it's like, okay, how many times have I used Wells Fargo versus Coinbase? Or how many times have I used Chase or Bank of America versus Kraken or Gemini? And so the competition is going to get incredibly fierce, which is good for people like us in the developer ecosystem and in the actual crypto industry, because now these guardians of access begin to actually compete versus the Binances of the world who will take 5% and continue to milk that. And so I'm excited for that. I think that is one good thing about Clarity. I don't really care about the competition over the stablecoin thing. The banks and the institutions are going to do whatever they can to keep that. And honestly, if they provide a better service for entry into crypto than the current exchanges, then maybe that's a good thing. And so who knows?
Yeah, who really knows? The things that I was thinking of that, so when I think about the years of crypto existing and the government having no response, just letting it happen. All the bad things that have happened over the last few years have been in key areas. One, the SEC running around suing everyone and just attacking legit projects, and they're just doing a reign of terror. Like every good project under the sun. So like there was obviously, they sued things like XRP, for example, for Ripple. They made weird allegations where they mentioned stuff like Zcash and Dash and did some investigations and just like enough to just FUD the market and just cause havoc, but like and just detrimental, right? And then also arresting people for open source development and peer-to-peer trading. That's like the suite of evil that happened. So Clarity has a chance to fix all of those things at least. So obviously, with the new administration, there's been not really any peer-to-peer type arrests. I believe Kash Patel or someone like that said something along the lines of like open source code, we're not going to chase after people for that. The SEC's, backed off. But that's all like very administrative that could just go completely 180 in just a couple of years. So getting that codified that we're just not going to go to prison for doing what we're doing, I think that's the win we can hopefully get from this if we get a win.
I agree. And that's a cemented win. I would love to see that as well. When you talk about the song and dance that we did, protocols and platforms that truly were able to respond to that by actually decentralizing and actually moving and losing that brain talent and having that brain drain and having that inflight of capital go to places like Switzerland, Dubai, Singapore, and places that are more crypto friendly. I think we've seen evidence of that capital being much more liquid and globally available than the US. And
absolutely.
So I don't think any administration would want to see that again. And particularly after how much money was raised for the Trump administration going in after the Nashville 2024 and into that election cycle. And so if I was a Democrat, I would say, how do I actually understand crypto? And how do I go in and actually create a way in which I can tailor my platform to the crypto industry? Because to me, crypto is apolitical, probably more along the side of the libertarians, as most people are that are actually in the weeds of it. And so the technology will continue to exist. It's just how vocal can you be about the technology, and how much do you want that technology to exist in your part of the world? And I think, if Bitcoin does become a strategic asset and we have people mining it altruistically, and you want those people to be able to contribute to it, then you're going to want it here. And that brings all the other things with crypto. And that brings the developers, that brings the privacy, that brings the people having these conversations. And that's just the kind of rub of it all. If you want to have that legitimacy, that power, and that involvement with Bitcoin and everything else.
Yeah, couldn't agree more. Now about the conference, obviously the Quiet team is there. Some nice pictures of you guys I just threw up there. I saw you guys are pretty busy at the booth doing, demonstrations of Blip Pay, giving away some of them tangems, like all that kind of stuff. On the whole, how do you think the value of the conference was for you guys?
I think it was great. I think for us to get connected with more people in the industry that are receptive to the idea. We want to talk to miners. We want to talk to people that are holders. We want to talk to people that use it, partners to integrate with. And those connections are there. If you look at the rest of the booths, it's kind of funny because now everyone is a service provider on top of Bitcoin or some form or fashion of an intermediary. And so it's actually really convenient because they have more ways of access and plugging in on top of infrastructure, but also kind of funny because it has diverged so far away from the original promise of Bitcoin and what it was meant to do. And so you saw a lot of people that were protesting the conference, a lot of the kind of knots people and people that were, not so much a fans of the way in which that conference was done. But for us, I think there was a ton of people that we saw that are already involved in the Quai ecosystem. So seeing them, saying what's up and getting to know them in person is great. And then also the miners that are interested in mining Quai and telling them about why it's more profitable, why it makes sense, how it's merge mined, how they can use their hardware, how they can set up a wallet, handing out wallets, all of that on the ground stuff's great to do. And so for us, it was fun to see all the people excited about it.
Yeah, for sure. And it is kind of interesting how the identity of it was not, it's kind of like a little mushy, because here's the thing. When you run a big conference like that, you have to bring people and you have to make money. And no, you're not going to be able. Here's the thing. As someone who is organizing a conference myself, by the way, I know like how the sausage is made. I've been doing all this stuff, and the alpha that people might not know is it's not. I think to the public, you might think, oh, this is it's like a show. You put on a show. You have speakers and things like that, and then you make your customers are the attendees, the people who come in and be like, ooh, I want to see Saylor, and then they come and do that. You cannot win a conference that way. It's not going to make money. Most of the profit is from the B2B side of things, meaning you do business with a company that wants to, say, advertise there, have a booth, all that, and then other people try to be there because they will also be in the networking presence of those other companies. That's the profit, right? And then the big splashy, oh, here's the speaker, and then the attendees who buy tickets that you get in is like kind of like it's like the icing, but it's not the meat of the product. So the problem with the Bitcoin conference is, first of all, you can't have like a small little circle jerk conference where the biggest asset in the space is just mogged by like the other stuff. And like the XRP people were there in force in Vegas. Like they had their own conference. We're trying to hijack that. If it was a small conference and then the Ripple people were just like everywhere, and like it would just look so bad. So you have to have a big conference. And especially because if you ever have a big conference once, you have to like downsize and lay people off if you can't do it again. So okay, you now have to produce. So the Maxis were a little upset with the Bitcoin Magazine people in the past because they were selling stuff to like NFT projects on Bitcoin, like ordinals and stamps and stuff like that. And they got really upset, like, oh my gosh, shitcoinery. But it's like, but it's all on Bitcoin, and we don't care, it's shitcoinery. But they aren't paying the bills. Someone's paying the bills. Now, this year, it started to feel a little more flexible. Like, kind of like back in the day, like, again, back in the day of, like, the Texas Bitcoin Conference, when it's like, oh, yeah, there's a lot of Bitcoin stuff, but then it's Bitcoin plus. Everything else shows up, too. I kind of feel like it's almost trending back in that direction, where it's... you have to sell stuff. There's Cash App and Steak and Shake and some other businesses that are like very Bitcoin forward, that they're just a bunch of weird random stuff all over the place. And then there's like Tangem that did not have any. They had some random crypto logos on their booth that weren't Bitcoin. So they just were like, look, we're not going to get a new banner for you guys. Just take it or leave it. They just kind of did that. And then, of course, like Quai, which is in the maxi highs, like peak shitcoinery. You have this this not even like an old OG coin, but like relatively new project that's like, oh my gosh, they're just soaking up all the shitcoinery, whatever. It has some VM stuff. It's got some other, like, the amount of vitriol you'd expect to get is kind of high, but then from what you're telling me, it seems like there was a lot of positive reception.
Oh yeah, a ton of positive reception. If you think about, well, first off, it's refreshing how the Bitcoiners think Quai is new, because it brings me some life and brings me some vitality. Because if you go to the other side of the market, like the Solana people, they're like, you guys are fucking boomers because you've been out for a year. So just the dichotomy of cryptos is refreshing because people are like, oh, Quai, like you guys are new. And it's like, we've been out for a year and we've been working on this for some time. I don't think of it as new, but I suppose literally if you've never heard of it, it is new. And so from that side, yeah, I mean, for us to go and make a wave, the people are optimistic because it is opportunity for them, especially if you're a miner. If you've been mining Bitcoin and you're down on some of your investment and you have been very pessimistic of what Bitcoin's going to do, there's halvings ahead, it's going to be more competition, more scarcity, thinner margins, electricity prices are higher, gas prices are up, you're having to shut off machines. You tried mining Caspa. Caspa's emissions are going down as well. Other types of proof of work projects have emissions going down too. And Quai's emissions are going up and are innovating by adding new algorithms and pulling in ways to get mining to be more attractive while making it sustainable for the project long term. Those types of people are super juiced up. And so for us to go and talk to those people, it's like a glimmer of hope for them because they're like, this has a lot of potential. This is exciting. It's like mining Bitcoin early or mining Ethereum early and seeing what Quai can do. And sure, it's more speculative. Sure, the maxis can view it as shitcoinery, but it's shitcoinery and speculative in their nature because that's their immune response and their immediate reaction for people who are trying things in public, building things, experimenting, and seeing what actually happens versus here's a fork that's never going to come. Here's a answer that we don't ever actually have to address. Things are fine the way they are, and we're going to go ride this ship down and see what happens until we're forced to make a change. And so who knows, maybe some of the things that Quai is doing will get pulled into Bitcoin eventually. There's been probably 5 to 10 things that eventually could get pulled into Bitcoin if they ever take a look at Quai and take it seriously. But at the same time, you know, we know the knowledge and we have the ideas around it. We've implemented it. It's live. It's running. So that's for other people to discover. And I think that refreshing piece of, wow, here's something new. This is something that hasn't been talked about. And there's actually some people that are like, I've actually had similar ideas, and just kind of people that drop by the booth. And it's cool to see that you guys have done this. That's also cool to see as well, because if other people kind of have isolated ideas on how they want things to be and what could be implemented, then, and if we're doing it, then that's a positive sign.
Yeah, that's for sure. And I kind of feel like the early days Bitcoin conferences, there was a lot going on. Like there was mining companies, you had people doing like payment wallets, you had people talking about new tech and the protocol and all this other kind of stuff. And then eventually, when they became purist conferences, there was a brief moment when people thought the L2 path was going to be a growth path. And when Lightning came on the scene, really, there was people doing all kinds of stuff with Lightning and Nostr and stuff like that. It was all over the place. But now it seems like Bitcoin's kind of the culture of no, saying no to things. And so therefore, when you show up, there's only so much you can be like, it's going up forever. Okay, can we go home? Like, there's only so much you can do there. And then the hunger to learn about new things, to like, oh, what new is going on? Is there a new fun wallet that does this? What new stuff in the mining world is there? Is there some new tech in like the privacy world? Like, all that stuff is just like, well, if you're not going to do it, someone's going to do it. And then they do.
I wonder, yeah, I mean, with Bitcoin Core the way it is, I wonder if it's almost like an ancient civilization where we've lost the knowledge. It's like we can't fork Bitcoin because we don't know how. We don't know what it would actually take. There's too many exchanges. There's too many bridges. There's too many institutions. There's too many people. The endeavor is just so massive that it's not worth actually upgrading, because last time we tried it, it was so difficult and pissed off so many people and resulted in these other things. So now it's just not worth it. And so, yeah, it's like, you know, like whenever it was the Dark Ages, they like couldn't recreate Colosseums and they couldn't recreate Roman architecture because they just didn't know how.
The knowledge is lost. That is actually very true, because nothing specifically comes to my mind immediately, but there is actually, when I think about BIP 110ers, who there are a few people like Luke Jr. who've been around forever, but most of those are like 21 era Bitcoiners who came in during the lightning surge of like this is money for the world and that kind of stuff, and that sort of it didn't work out. But the point is, they were like original Bitcoiners, but without all the history. And so when they're like, oh my gosh, there's JPEGs, this is sucky, we want it to be money only, all this stuff, they come in without the knowledge of the past, and they're talking about like pruning nodes and like doing this kind of stuff and basically reinventing simple payment verification, sort of like SPV. It's like, oh yeah, that's literally in the white paper. That's really what Satoshi's talking. Oh really? And there's just like a bunch of those kinds of things about these new ideas are just like recycling the old stuff that they just forgot they could do.
Oh yeah.
And so
color coins, that's already been done. You know, stable coins have been talked about. All of these things have been talked about. It's just, how do you package it in a way that makes sense and is usable, and is it actually a good idea? And so you sort of see these bad ideas resurface every time, and it's in a good hope, because you're like, I'm hoping this time it's actually a good idea, because we have better technology, we have better knowledge, we have better adoption, we have better distribution, and then it just turns out to be a bad idea.
Yeah, absolutely. So consensus was a lot of similar type things, but it's kind of different in some ways. And I'll just won't bore you too much with, but Callisti, who is one of the Bitcoin Cash people at the Bitcoin conference, he posted, he says, just watching the consensus 2026, first words out of my mouth, it's already more lit than Bitcoin. Okay. And then there was a very interesting thing, and if you open up the stream, you can see these things, but I don't think you really need to follow along. But the Acronym Foundation had this carnival booth. It's like an old school carnival with a big Pepe head, and they were actually having people use offline NFC crypto payments to demonstrate their utility there. And I thought it was kind of funny how, like, as I pointed out there, it was like Suit Central Station, right? It was way more institutional than the Bitcoin conference, even more just institutional corpo slop. But then ironically, when you it's like the double negative, where you have if you have the circus in the circus, it is the serious one. And so that was the highlight of that. I always have to give a shout out to those guys. And I did there was some interesting privacy people I ran into, like such as the Harry, etc. from NIM. I don't know if you know about NIM, but
yeah, NIM's great.
Yes, NIM, and then the Hive team was there as well, and so some of there's some OGs. The one interesting thing about consensus, and it's always been this way, where consensus was the big event, and everyone had to go. Everyone networking, whatever, had to go, and then it always just sort of petered out into the side events. But now it has become kind of a sort of like, if you think about an L1 as a justification for an L2, I kind of feel like consensus is like a side event factory at this point. Like actual consensus was like nothing going on. Like there's these weird boosts, like, well, what were they for? No one was doing that stuff. No one was at the talks. Few people. You had Michael Saylor giving his talk during his drama moments, and he had some people watching, but it was not a lot. And then you had Changpeng Zhao, CZ of Binance, selling his new book, and there were some people there, but it wasn't that many. It was kind of muted, but then like the number of people who said that they were there that I never saw, and I walked around a lot, is off the charts, because everyone was at side events, or everyone just like dipped in, saw a couple people, dipped out, did some side meetings and stuff, and guilty as charged a little bit on that. So it's just kind of an interesting thing where I think it was more value maybe than the Bitcoin conference in a lot of ways, but also if you're taking it as like Bitcoin conference, despite not being cohesive, was more cohesive.
Yeah, I mean, everyone is too busy trading Pokemon cards and focused on semiconductor stocks. So the people that are left in crypto are debating over the scraps and having technical conversations around how to best orient the industry. And I don't know if that's on a main stage or at a side conference or on the Twitter timeline or on Telegram or where that conversation is being had. But conferences across the board for sure aren't what they used to be. And the excitement and the development, I think, has shifted a lot to AI. It's shifted a lot of mind share to that. And it's going to take a real product to get people to talk about crypto. And it's It's going to take real excitement and utility and development for people to have that conversation on the main stage that drives people to actually want to get activated and actually do something. And so I've always liked Consensus. You know, Dr. K was at Consensus in Hong Kong. That had some good side events. Consensus in Austin was one of the ones where we did a big after party in 2022 that everyone loved. And so that's always fun. And it just takes time to get all the people together again, because it's liquidity and cycles and attention and development and trying not to get distracted. And so, and it's just also community too. So like, where are the communities forming? Where are people actually trying to create PvE games versus PvP? And it's funny too, just because as crypto goes on, all these bonds and all of these relationships from prior cycles are also sort of looked at. And they're like, well, who's doing the right thing, and who's trying to build something that is continually lasting, and who's not just trying to scam me and go and, you know, chill on the beach.
That one is nobody, but just kidding. But.
And so that's like, I think the interesting part about conferences, because it's like, well, who's around? And so that's kind of the cool part, because when you do see people that you like building with and going to events with and actually pushing the industry forward with, it becomes really powerful and it becomes a force multiplier. And I almost prefer conferences in the bear market, to be quite frank. I prefer nerd arguments on Twitter in the bear market much more as well. And so that's the kind of current state of affairs. And I would agree with you. And it's interesting to see so many conferences still kind of on the schedule, because before in the bull market, for sure, it's very commonplace where people are in Korea, then they're in Singapore, then they're in Miami, then they're in Las Vegas. And it's like, how do you guys even have time to do things? How do you guys actually build anything versus just going conference to conference? But now this year, it kind of just feels like, okay, well, here's Vegas and Consensus, and then it kind of fizzles out for the summer. So we'll see. We will see.
Yeah, and I'm going to a few other conferences this month alone, and we'll see what's going on there. One thing I thought was interesting, if I would say the positive, like the winner of Consensus, I would probably say is the Midnight Network, because it's sort of new and hot, and also is in this interesting this nexus of the privacy cypherpunk kind of restart. And I did see like some of the cool people, the cypherpunk did sort of hang out close to the Midnight booth or whatever. But then it's also trying to be an institutional thing, and it's also a new shitcoin. So it's like all of the above. Right. And the funny thing about that is it's, you know, Hoskinson's new thing. Cardano did have a booth there, and people got really upset because it was completely empty for most of the time. And to the point where Hoskinson himself had to come back the next day and just man the booth to like save appearances. But like it definitely gave off. So, you know, Midnight's doing well, but also I think it was pretty obvious it gave off like the whole Larimer move vibes.
Oh yeah.
Of like, yeah, it's like, you know, I don't want to play with you anymore. Bonk. And then now he's on to Midnight, and then like Cardano's just like drowning underwater, you know.
Well, and they're arguing about their treasury that goes to the IO group and IOHK and how much money is allocated and how it was not spent, and how there's $5 million grant deals that they're trying to get through, all while Midnight hasn't seemed to have done so well. So yeah, I mean, it is definitely one of those like, I'm putting the doll down. I'm not playing with you anymore. There's too much going. Let me go start something new, because to be quite frank, all of the Midnight privacy features could have been built on Cardano. I hope people realize that. It's not that technically hard to add in the privacy features that would be needed onto your existing chain if you're developing the technology. And so from a implementation perspective, maybe not the political perspective or the governance perspective or whatever Cardano has done, but the utility of what Midnight provides could have been applied to any chain. And I will say they have a 2-token system. Their 2-token system is not as good as Quiet Chi, but other people will wake up to the reality that is probably a necessity in new chains to have that type of dynamic. And so, yeah, I think it was a misstep.
I should send you, I wrote some articles about multiple token systems before. I should send it to you just for funsies. But yeah, as far as that's concerned, it's like, why don't you, it's very indicative, and I think this will be one of the last cycles you see stuff like this happen and be successful, where because crypto's been so speculative every time that you just have to do the Larimer and wash it over again, do something new to just get the next capital pump and the hype pump and just keep it going. Because by the
People
time
like free money, right?
yeah,
And so
so
there's new tokens, people get free money.
and I don't want to sound too cynical in like thinking this way, but it's almost the way you've had to do crypto, where you got initial, even if you didn't do an ICO or something, if you just launched the project and then the founder had some tokens for whatever reason, even if they mined them honestly, Satoshi style or whatever, the stuff pumps, everyone likes your project, you start advancing the tech, you start doing everything, and eventually people just move on to the next hot thing and leave you in the trash. And so then all the hard work you've done in order to make it survive, you just have to take it and put it on a new chain with a new token and then just keep building from there. So it's almost like the chain hopping in this crypto economy has sort of been a necessity for some. Now, on the other hand, I think that that's over now that we're moving into a more utilitarian era in these coming years. I think that you will need, it takes forever to build something lasting. And so, for example, things like, let's just say Coinbase, again, we've talked a lot of smack about them, but like they were there since like 2010 or something, 2011, like really early days, and just building relentlessly since then until they made an empire. And because there was no Coinbase token up until recently, right? There was no stock or whatever. It was just product and consumers. And I think that once the chains have to start doing that, we're going to need that. And so hopefully this is the last leapfrog we see, you know? So,
yeah, revenue matters, product matters. That's what
have
I've
you
been
thought of a
banging
sexy
the drum on, I think.
rebrand for Quai in a couple of years? Just kidding.
No,
you
it's
guys
called
are new enough. You're fine.
No, it's called build things people want to use, man. I think for me as a founder, I can't go to bed at night thinking that everything is just going to be froth with no substance.
Yeah.
I'd much rather live in a world where people use Quai because they need it and because it provides them a better service than other platforms, and it provides them a new way of looking at things and a new way of interacting with blockchain, or a new way of operating their infrastructure, or operating the way in which they want to interact with crypto. And so that, to me, there's been countless opportunities where we could have taken the easy way out, and it likely would have been in a better position in the short term versus doing the hard thing the right way and going down that path.
Yeah. Obviously the same for so many things. One thing that I think people should study at some point, whether or not you want to copy it or not, but is the Zcash playbook, whatever they've done, because Zcash is one of those few projects that was like really hot and then just like did the usual slide to oblivion and then is really hot again. Like that doesn't happen in crypto a lot. Like you have some slow and steadies like Monero that have been sort of there the whole time. Litecoin is kind of sliding now, but for a while it was just still there. Bitcoin is obviously the big example of that. Everything else has been a pump and a slide kind of thing. And obviously like Dash is doing well now, but it's like it's too early on the charts and et cetera to be able to say. Zcash is like the one example of you didn't make a new token. You brought it back. And I think what they probably did is they got a new allocation of VC money. I don't know how, I don't know what were the terms, I don't know how this, whatever it was, but it did give a second pump out of the thing without disenfranchising old holders. So that's like the one example I could see of like, you managed to not do a Larimer Hoskinson,
Yeah, or you get revenue. You get revenue, you don't need investment.
Crazy talk here, man.
Yeah, blasphemous. Yeah, or you go lean, right? I mean, if you look at Tether, one of the most profitable businesses in the world, they have 15 people, 20 people. Hyperliquid, 11 people. And so
Telegram,
you just don't need as many people. Yeah, you don't need as many people to execute a high level now to bring in that revenue. And so the world opens up and you don't need, we get a lot of criticism for Quai. It's like endless. You got Caspa people in my replies all the time, like, oh, you guys have a VC pre-mine. It's like, who did you want to develop the technology? Like, who did you want to actually get this done in this age of whenever it was that exact same 2021, 2022 timeframe where the SEC was suing everybody. So good luck doing an ICO, and good luck competing with the endless amounts of coins in the market if you go and you do a private thing or a small mining launch. And so people love to debate the properties of fairness. So yeah, I mean, I think looking at it, the Larimer, Hodgkinson, Zcash type thing is all short term, because if you look at the economics of Zcash, it's hard to be incredibly bullish of Zcash at $800 whenever you have miners coming in at $1 million a day and putting sell pressure on the token. Same with like Solana. Solana at 250, they couldn't get an inflation reduction proposal through that would have cut the validator rewards so that you're not subsidizing the network and paying for all of that high bandwidth. There's countless systems that are like that. And so, yes, it's a feel-good thing. Sure, Zcash has good technology. Zero knowledge, they were the first people. It's quantum secure. Zero knowledge is useful in the shielded pool. I get it. I think all of that stuff's good. But I think there's still fundamental things that people aren't addressing just because it's trendy. And you know, someone's got to call a space.
And that's like the technological sustainability is something that needs to be worked on. As far as like the war chest founders' money sustainability is something that was addressed. So, and I'm not fully privy on how it was addressed, but it was. And so at least you got that.
They forked off the wallet, right? And then they wound down the DevCo, and the DevCo got new funding through the Zashi or Zotl wallet, right?
Yeah, there's a lot of stuff going on behind the scenes, but it is kind of like the revenue time bomb is kind of one of those things, and I don't know very many protocols that have a decent amount of revenue. There's like, I think Bitcoin had the potential to be, because people were paying enough for it and they got throttled. Like, I think people would pay 50 cents to $1 for a Bitcoin transaction if the whole world could use it, right? And I don't know if that would be enough, but whatever. Then Ethereum had a lot and, kind of throttled their stuff. Like Hyperliquid is obviously doing great. And then there's like Solana, it's hard to tell, again, because there's a lot of fake stuff there. So it's hard to tell, because there's real stuff too. It's hard to tell what's the real and what's the fake. So it's kind of a no comment. But then you have things like, for example, like Thorchain, which is like one of the top 10 revenue producing protocols, despite not being like a top 100 coin right now, like kind of coming from the brink of oblivion. It's a tough, the tough kind of move to revenue. So, fingers crossed it all works out.
Yeah. Hey, Kwai's top 10 L1s in revenue, man. It's been consistent. It's been
because
going
of the
on,
SOAP stuff, right? Because of merge mining, because of theft.
Oh, right.
Really theft, but
because of subsidized acquisition and making sure that proof of work is not dilutive. So it's a great technical innovation, and I hope more people look at ways in which revenue can be achieved in this space.
Yeah, absolutely. And I know people are starting to view chains a little bit more like businesses now, even though they're decentralized and stuff. You have to kind of view what you do as a business, sort of, and find how you're going to get the paying customers. And there's a payment processor that will go unnamed for now that is looking into like mass off-ramping for whales and stuff like that, on and off-ramp type stuff, because like the paying for stuff business is just it's rough, because you have to get like Visa level traction, so you have to eat in the meantime. And so I think that every crypto should prioritize a long-term business, but also have a side business that pays the bills today. Totally. Because the emission doesn't pay the bills forever and just leaches out the community eventually.
Oh, 100%. 100%. Dilution is key. And I do have a stop here in a few minutes.
Sounds good.
So I appreciate you having me on, but would love to wrap up with thoughts if you have anything that you'd like to cover.
That was it. That was actually, believe it or not, I'm not just saying it because this. I was actually about to be like, cool, man. Well, anything else you want to cover? You want to wrap this up? So, other than the stuff I threw up on the screen with like the wallet at demo to Bitcoin, anything else you want me to throw on the screen, as it is 4:20 as well as shill o'clock?
Yeah, man. I think we covered a lot of different topics on the space, and always glad to come back and talk about more with Kwai, we've been pounding the pavement on cypherpunk beliefs in terms of building real utility and working on distribution, awareness, and adoption. So no one's cracked the silver bullet yet, and we have a lot of things that are in flight. So our Blip mobile wallet, definitely encourage people to check that out. It's a new release on Android as of last Monday, or on iOS as of last Monday, with Android coming next week. So expect that if you have iOS or Android. And I think there are people who need APKs on Android as well, so we will release those if you don't have the Play Store. And then beyond that, Entropic. Entropic is our AI workstation. So if you're interested in playing with agents and ways in which agents can help with automation and with different forms of creativity and with executing different workflows, definitely encourage people to check that out. And with Soap, churning along. We've done over 4 million in revenue. We've burned close to 8% of the circulating supply. And with the Singularity fork, we forked out 81.1% of future unlocks. So the FTV of Quai significantly reduced, and we've made proof of work non-dilutive. So working on soaping Bitcoin soon. That's our next larger milestone. So going from Bitcoin Cash to mining Bitcoin directly, I think that will probably tick off a bunch of maxis. So maybe they'll criticize us of some more shitcoinery whenever we're selling Bitcoin to buy and burn Quai. That will be a ton of fun. So that's the long-term horizon, man. And meanwhile, disrupting all things with Chi, building utility out for flat coins and energy-based money, and ensuring that we get broader adoption there. We have some other hard forks that we're looking at on the short term to adjust preference, reward, and optimize so that we can get to soaping Bitcoin. So yeah, that's what's next.
Yeah, perfect stuff. All right, well, thanks everyone for watching. Follow Alan K at 0x. What was it? What was your
0x
handle?
Alan K. Yep.
I just want to make sure
I've retweeted this. I've commented. You'll find me on the posts.
Yes, and then check out the Quai ecosystem. They got cool branding on the website. As long as you're not on a crappy laptop where the animations are going to make it crash. Thankfully, I'm not on that.
We've optimized it. We've gotten it a little better.
Yeah, it's charted maybe. Anyway. Yeah. Thanks everyone for watching. See you guys not next week because I'll be in Slovenia then. So I will see you guys at some point. And in the meantime, have a blessed weekend, as they say. Cheers, guys.
Yeah.
Adam, we're here because we love you. And we're all tired of watching you get abused.
Abused? By who?
Oh, hi, I'm Visa. I charge you 29% interest, 3% foreign fees, and make you wait 3 days to see if your payment went through.
But I thought you were my friend.
No, Dash is your friend. Instant, private, under a penny, and with Dash Spend, you walk into over 100,000 stores and pay like a boss.
All ready, yeah? Awesome, thank you very much. Feel alive, guys. This is awesome. Tastes like freedom. And I save 5% by using the app.
That's the Dash High, baby.
Let's go.
Download the mobile wallet, one tap, boom, financial sovereignty.